Hey, what is going on, my friends, and welcome back to another video on the My Stock Journey channel. So I know the scenery is a little bit different. I actually do have a roommate, or just a best friend of mine, and he's staying with us. And he's just like sleeping right now, and usually I kind of go in there whenever I want to make a video, and I'll go in there and I'll kind of just kick him out for a little while. But he's sleeping and I don't want to go in there. It's pretty late right now, and so with that being said, we're just gonna be in the room for today, kind of hanging out. This is a little pretty simple episode video, whatever. So it's nothing too serious. But today I did just want to go over some stocks that I am buying. If you are new to the channel, you might not know, but if you've been around for a while, you know that I've kind of been rebalancing my portfolio. I've been adding new stocks. I've been rebalancing the stocks that I already own just to kind of make my positions a little bit more equal in weight. And so with that being said, I have bought about 4 or 5 stocks today, and I want 2 or 3 of them, or 2 of them are brand new. 3 of them are ones that I'm kind of just rebalancing on. And so what I'll go over today is just what I've been up to and all the buys I've been making. And yeah, so it's going to be a pretty simple video today, not too crazy. And with that being said, I hope you guys do enjoy this video. If you do, don't forget to hit the like button. It helps me out so much. My last video almost hit 200 views within the first 3 days. And for a channel that only has 225 subscribers, that was an amazing feeling. If you are new to the channel and you do enjoy this video, maybe wait to the end, see if you like it, see if you don't. It's all good to me. And go ahead and hit that subscribe button if you do. Comment any future suggestions for any videos you'd like to see. I do love to get recommendations in the comment sections for videos that y'all would like to see me do. If you want my opinion on something, or stocks that I bought, or move how I make in a certain hypothetical situation, anything like that, I'll always make a video about. So just let me know down there. Also, if you have any feedback about how I can make these videos any better, just let me know down there as well. So with all that being said, let's get straight into the video. So we are on our Robinhood account, and as you can tell, we do have some stuff going on right now. So basically today has been pretty busy, I must say. So what I'll go over first is I'll go over what I've rebalanced, and then I'll go over basically the new stocks that I've bought, right? So as you can see right here, we're going to come straight to Apple, and you can see I've been pretty busy on Apple recently. I've increased my portfolio holdings to about a little over, here we go, 5 shares. So very happy with that. I know it's a little bit pricey right now if we do look at the 3-month, or let's see, the 5-year per se. It is very high. We could expect a little bit of a dip, but honestly, I'll just buy the dip. I wanted to go in on this stock. This is one that I truly believe in. And so with that being said, I had no problem with just going in, increasing my position in this stock. My current equity in this company is $1,958. My average cost is $384. It's at $388, so we're already looking at a return of about $22 or 1%. And honestly, considering I only got this position about roughly 4 or 5 days ago, looking at a 1% return already is definitely not bad at all. And so with that being said, that is going to be one that I continue to boost my position in, especially if they do release a new phone at the end of the year. I know they had to reclose some of their stores, but I don't feel like that's going to last as long. We are looking at a lot of stuff going on with vaccines and everything like that. So I'm hoping that one of those is positive and comes out right, so we can start to see some even more growth. Because if all Apple stores are able to reopen and, kind of the world goes back to normal, I can see this price jumping up into the 400s. And so that being said, I'm definitely going to hold on to this position, keep increasing it over time, and watch it grow, in the future. Next up, we have Microsoft. As you can see, it was a bit of a red day today. And so with that being said, I did increase my position in Microsoft as well. I increased it to about 8.36 shares, which is about 4 more than I had in the last update. Honestly, cannot complain. My average cost is $197.89. We're sitting at about $207 right on the dot. So I'm looking at a total return of about $76. And that, 4.60% gain already within this last week. Or I had 2 shares already, and so I guess that kind of factors in a bit. But I have been seeing pretty good gains. As you can see, my average cost is $197.89. My market value is $1,731, and it takes up about 12.4% of my portfolio. I like to see each one of these sit around to 15% because I don't want to have too many stocks in this portfolio. Matter of fact, I actually kind of goaled myself. I only want to own 8 stocks over the next, honestly, couple months here, because I feel like if I own a stock, I want to be able to make sure that I'm monitoring it and watching all the news about it and seeing all the reports that come out about it. And it's very hard to manage it if you have 20 to 30 stocks. I feel like it's really hard to make sure your investments are doing the right things. So that's why I want to keep it pretty limited, keep it simple, and invest in companies I have faith in, right? So, like I said, with Microsoft, it's another one that is very high right now. We could see a little bit of a dip coming soon here, but honestly, I am not too worried about it. I'm gonna buy the dip. I'll go down with it. Hey, I have faith in Microsoft, and if Microsoft goes down, I'm going down with it. So, on to the next one. So, my next one up is Aflac. I increased my position in Aflac to about 34.8 shares. This is another one. This is another one I have a lot of faith in. I did a bit of a breakdown on it in my last video if you wanted to go check that out. But honestly, Aflac has a lot of room to grow. It has a lot of potential, and I see a lot of upward momentum coming in the future from Aflac. And so with that being said, once again, I'm going to continue to grow these shares. I'm going to grow my position in this. And like I said, I'd like this one to take about 15% of my portfolio, so that's about $2,000 roughly. So I'm just going to keep adding into it. I'd like to see that 100 share mark by the end of the year maybe. And so I'm looking at a $34.40 average cost. It's in at $36.28. So it gives me a return of about $65, which is another 5% return on investment as of now. Up 1.77% just today alone. That's phenomenal. The dividend yield, as you all know, is 3.15, and I love that. As I've kind of rebalanced my portfolio, I've been focusing less on dividend paying stocks and more on companies that I have faith in. And growth wise, I guess I'm kind of somewhat turned into a growth investor. But with that being said, I do love my dividends. I do love stocks that pay dividends. And so with that being said, I'm going to continue to add on to this and take those dividends as they come. So speaking of dividends, I did forget to mention that I did get paid out my dividends from Store Capital today. Let's see. No, that's not it. If we come down here, we will see that I have 200 shares, and that paid me $70 in dividends. And so what that means is that I'm going to reinvest that. I have it set at market open. I never really try to time the market when I'm reinvesting my dividends, just because I feel like they just need to go back in there and start making money as fast as possible. And so with that being said, that is going to get me another about 3.5 shares with the $70, which I cannot complain. I also will come right here. I did get paid $20.50 from Main Street Capital, which is a stock that I don't own in my portfolio anymore, but that was a dividend. And what I did want to do is reinvest that $20.50 into another stock. I'm not sure which one I'm going to do it yet. Probably Coca-Cola if I had to guess, but we'll kind of wait and just kind of see what time does. I don't really want to rush this one at all. So I'm going to reinvest those dividends and continue to grow this portfolio. So before I go into the two new ones, as you can see, is Atmos Energy and Visa. I did just want to note that I didn't increase my position in Tesla at all. It's pretty much just the same, and I'm just going to wait because Tesla's acting real weird right now. And so with that being said, I don't want to just put too much money into them at once. I just kind of want to take my time and slowly build up that portfolio investment. So with new investments, we are sitting at Atmos Energy and Visa. So Atmos Energy is actually a stock that I owned in my portfolio in the past. It was one that honestly, I've had a lot of faith in, but as I said, I had the wrong mindset. I wasn't thinking necessarily in the best way I could as an investor, especially for the long term. And so with that being said, I did end up selling them recently. I sold them about a month or so ago. I did re-add them to my portfolio because I realized that it was kind of a mistake to sell them. And, just learning these lessons as an investor, kind of what I went over in the beginning of my last video. But, Atmos Energy is definitely a strong buy in my opinion. It has a lot of potential, and they're doing a lot of things to increase their, potential in the future, right? So whenever I'm looking at Atmos Energy, basically when I'm looking at energy companies, I'm looking to see how they will perform in the future and what things they're doing to set themselves up for future success. Atmos Energy just in the last 2 years, I want to say, has invested $6.5 billion just simply to replace aging infrastructure and replace these old pipelines and things like that. And that kind of shows me that not only do they have the capital to reinvest into their company to make sure that they are doing well, but they are also interested in reinvesting and expanding their company to, produce better and, do better things for their company itself. And that shows me a lot of potential future growth. And that's a big part of the reason in which I am investing into them. Another big player in the fact that a lot of people do like Atmos Energy is they have increased their dividends for over 36 years straight. And once again, I'm not investing into them simply for the fact that they do pay a dividend, but it is definitely, a nice little icing on top of the cake. So I do want to go ahead and kind of make this a dividend paying stock. I don't know, I don't necessarily want to classify stocks as that's a growth stock or that's a dividend stock. I kind of just want them to be each little assets in my portfolio. But at the same time, I do kind of want to make sure that I'm investing into certain ones for different reasons. Like if one's more of a dividend stock, at the moment, since I'm not really relying on the dividend payments to live, I'm not going to make them necessarily the biggest player in my portfolio that I have. But at the same time, I do want to make sure that I'm giving them their fair position in my portfolio and making them kind of like an equal player. And so with that being said, it's just going to take a little balancing and learning as an investor. This is all pretty new to me, in a sense that I've only been doing it for like 8 or 9 months. So with a portfolio the size of mine, it's growing so often, and as it grows, it becomes, more things, like more difficulties and more confusion comes out of nowhere. And so it definitely does get kind of, a little confusing as a newer investor to figure them out. But as time goes on, I definitely do have faith in myself that I'll kind of really get a full plan going, and I'll really truly understand how to set up my portfolio exactly how I want it. But we'll see as time goes on for sure. So when it comes to my portfolio, I have 6.99 shares, which is roughly $703.53. My average cost is about $101.75. Atmos did kind of come down a bit today from $101 to $100.64. Honestly, it's not really a big deal. If you look at their 5-year, they definitely have shown a lot of growth and very consistent growth. If you do know my channel and if you have seen the stocks I'm investing in, I'm very interested in investing in consistent stocks that don't have much volatility. Volatility is not really much for me. As you guys know, I'm an MMA fighter, and I feel like my life is stressful enough, and so having stocks that are pretty stressful just isn't really my groove. I kind of want to just be able to passively invest my money and not have to worry about it too often. And so that means that Atmos Energy is a perfect example for the type of stock that I look for. As we can see here, it was about $120 before the drop and everything. Started the year roughly around, $50. So that's over 100% gain in the last 5 years. And honestly, that is amazing, phenomenal growth. And I do believe with all the reinvestments that they're making in their company, that we will see these numbers continue to rise in the percentages, and their growth continue to just go on for years and years to come. But yeah, so it takes up about 5% of my portfolio, considering it's only at a 703 market value. I do really want to expand that. I want to expand this one to be a pretty big player over time. And so with that being said, we'll see it grow. The dividend yield is 2.26, which honestly is not bad. That's about $2, roughly $2.26 per share that I own. And so as that continues to go on, those dividend paychecks will definitely begin to look nice in the future. And last but not least, we have Visa. Visa has been a big topic recently. It's been doing a lot of things, and you honestly can't deny the success that this company has had. You see the new Facebook partnering, and you see all these different things and all these routes they're taking to make little extra forms of revenue. And that's very appealing to me. I love looking at companies that have not only low debt, but also multiple streams of income. Obviously, you don't want to just invest in a company that just mainly focuses on one thing, because if that one thing goes down, they're screwed, right? So whenever we look at things like Visa, the reason that I was attracted the most to Visa was actually the way they make revenue. So as we know what's going on right now, that interest rates and everything like that's just all over the place. But if you look at Visa, they actually don't make the majority of their revenue from interest rates. The majority of their money is actually not coming from the fees and the interest that is held by the cardholders, but actually it's coming from different things within their company, right? So they're making money from things like client services, data processing, licensing fees. They've kind of figured out this way to minimize their risk whenever they're making this revenue. They don't want it, the majority of their revenue to be coming from interest rates on credit cards, because we know people have a big habit of going into credit card debt, and all these different things. They've kind of taken a bit of a safer route, and that is a very, very appealing aspect of their business plan to me. I really do love the fact that they've been a little bit different with the method they're approaching with, their business model. Not only that, whenever the whole pandemic started, they only dropped 37% from their highs in February, which may sound like a lot, but if you do look at some of these big movers, some of these big companies were dropping 50%, 60%. So seeing them only drop about 37% was honestly pretty appealing. They're only down, not too much whenever it all started, and that kind of showed me, okay, they can withstand it. Whenever bad things start, they're not just gonna just crumble. They're not just gonna fold. They can actually withstand the test of time, and that's like just a flashing light in my criteria for a company I want to invest in. And then honestly, whenever you just kind of think about it, and whenever you just kind of think about credit cards and everything like that, Visa is a major player in the world itself. Visa is on the forefront of its sector, and as you guys know, if you do follow my channel, that's something I look for. I look for these companies, and I like to invest my money in these companies that, when you think, if this company didn't exist, would the world be different than it is today? If the answer to that is yes, then it's already making its way for me to want it in my portfolio, right? You look at Apple, you look at Microsoft. If these things weren't around, this world would be much different than it is. Of course, there would probably be another company that's doing the things that they're doing, but that's not the case. Apple, Microsoft, Tesla's becoming a big part of it, right? You look at like Coca-Cola especially. You look at Coca-Cola and think, what's this world without Coke and Sprite and, you know, all these different things, right? And that's the reason I love having them in my portfolio, because it makes me feel so secure with my money. I've worked really hard. You know, I've taken a lot of punches, and a lot of this, you know, this money I made is from a really hard work. And I don't want to just put that money into random things that aren't going to make me money, or they can make me a quick buck, but aren't going to build my wealth over the long run, right? So with that being said, that is all the changes I've made today. I bought a little bit more Apple. I bought a little bit more of my Microsoft shares. I bought a little bit more of my Aflac shares. And then I bought Atmos Energy. I added that to my portfolio. And I bought Visa as well. If you guys did like this video, definitely let me know once again by hitting that like button. I love giving you guys just updates, because with the market going on right now, it's just all over the place. And I feel like a lot of lessons can be learned during times like these, because we're seeing so many different situations that you really wouldn't see in a stable market. So I feel like right now, yeah, it is like a sink or swim as an investor moment right now. But at the same time, I feel like if you kind of understand how to take lessons and keep moving, this is a very big opportunity for a lot of people. For me especially, like I feel like whenever the market stabilizes years from now, whenever it's not so crazy, we're gonna be, me especially, I'm gonna be so used to seeing craziness that if we have a pretty bad day, I'm not gonna stress, or I'm gonna understand, okay, buy it rather than panic, you know? And so I'm definitely happy. I love the fact that I got in when I got in. I'd be pretty upset if you know, I missed this big opportunity to get really deep into investing. And yeah, there's a lot of sales out there, of course, but the lessons that can be learned right now are priceless. So with that being said, I will see you guys next time. I do want to start uploading more often. Like I said, you know, I had a big break, 3 or 4 days in between this video and my last video, but that was just because, you know, I'm working and I have all this different stuff. But I think I've set a pretty good game plan on how I'm going to get like 3 or 4 videos out every week. So we're going to try to make that happen. We're going to try to hit that 250 subscriber mark. I wanted 200 subscribers by my birthday. 2 weeks later, we're sitting at 225. So I'm definitely not complaining at all. And I'll see you guys next time. Peace.